Happy New Year and happy Friday. Today is January 3rd, 2025, and this is your first Friday planning video of the year. As promised, as we kick off the new year, we're going to be covering topics like setting financial goals for 2025, how to align your savings, investments, and spending to achieve what matters most. How about creating a new year budget? Practical tips to manage cash flow and setting realistic spending limits. Also, tax smart strategies for early 2025, ideas to plan ahead for tax season and minimize liabilities, and an investment outlook for 2025, a look at what trends, risks, and opportunities might shape the market next year. We'll also continue to review your risk profiles, that risk audit I talked about. With markets at these levels, in my experience, as I've said, this is the best time to evaluate this and try to get honest with yourself. So be sure to tune in as we dive into these essential topics to make 2025 your best financial year yet. Let's get started. We'll get into these in coming weeks. Today, I want to wrap up your first week of the year with a bit of reality. As I mentioned on Monday, these first few weeks all over the airwaves are full of lists. Top 10 of this, top 25 of this. Aside from from more divergent S&P 500 targets, I saw 7,000 last week. But how about this? One of the major brokerages is out with their list, 25 stocks for the year. Never mind that they do this every year. And last year, of the 24 stocks they chose, only 14 were up for 2024. 2023, 14 of 2023 were up also. So lists are lists. Let's get the year started off right. As we look to tax season, now is the time to lay the seeds for collecting your data and doing so in a methodical way. Now's the perfect time to get your financial house in order. Preparing your tax data thoroughly can save you time, money, and unnecessary stress. Today, I'm going to share a comprehensive guide to organizing your tax information for your accountant, ensuring a smooth filing process. Remember, I'm not giving you tax advice, and watch for the tax planner from your accountant, but here are some tips. Let's start with income records. Gather all income documentation. This includes your W-2s from employment, 1099s, K-1s, and any other income sources like rental properties or Social Security benefits. For investment income, don't forget your year-end brokerage statements because that details interest, dividends, and capital gains. Next, identify eligible deductions and credits. Next, focus on the deductions and the credits. These can significantly reduce your taxable income. Some examples include medical expenses above the threshold for deductions, charitable donations. Be sure to have receipts or acknowledgement letters. Keeping receipts and proper documentation is critical to substantiate these claims. Organize your property and your investment details. If you own property, bring mortgage interest statements, property tax receipts, and documents for any energy efficient home improvements you made last year. Investors should also gather detailed records of stock sales or other asset liquidations. Ensure you calculate the cost basis and any realized gain or losses accurately. Track your estimated tax payments and refunds. Make sure you have records of any estimated tax payments made throughout the year, including dates and amounts. Also include any overpayments from the previous year that were applied to this year's taxes. Your accountant may remember that, but it's something to put on your list. Summarize your business or your side hustle income. Now, this is the new home office deduction these days. Be careful if you run a small business or have a side gig. Ensure that you're separated your personal and business finances. Provide profit and loss statements, expense tracking details, and receipts for business-related expenses like travel, meals, and supplies. Accurate record keeping is key for maximizing the deduction and avoiding IRS scrutiny in this topic. Compile your key personal information. Now, make sure your accountant has updated personal information such as new dependents, change in marital status, or an address change. If you've moved between states, state filing requirements will also need to be addressed. Finally, or not finally, but additionally, create a tax summary. To streamline the process, prepare a tax summary sheet. This can include a list of income sources, deductions, and any questions or concerns you'd like to discuss with your accountant. A well-organized summary saves time and ensures nothing is overlooked. Again, your tax advisor may give this to you. Use it if you get it. I'll wrap up with a few cool tips that may or may not work for you. How about digitize and back up your documents? Scanning your paperwork and storing it in a secure digital folder can simplify sharing the information with your accountant, and it can protect against loss. And communicate early. Tax professionals are busiest closest to the deadline, of course. By reaching out early, you give your accountant more time to strategize and address any issues. Okay, that's enough for this first Friday of the year. Taking the time to organize your tax data now can make filing your taxes easier, reduce errors, and potentially uncover savings. If you have any questions or need additional guidance, don't hesitate to reach out to your tax advisor. I work with many of them, and I'm happy to coordinate with them. On a side note, but very important, if we have not done the risk audit of your holdings, please call me. As I've been saying for months now, now is the time to review this when markets are near highs. Markets have shifted your risk too high. Just when the markets did that. now may be a good time to make those adjustments. If you found this video helpful, please feel free to share it. Get organized in the new year. Have a great weekend. Happy New Year. And we'll see you next week when we dig into some more of the list we started with. Have a great weekend.